Joining us now, our friend from Red Wave Investments, Mark Smith, redwaveinvestments.com. We were talking to some friends, gold dealers, and price of gold and silver both down pretty hard. Is this more Cyprus backlash, Mark, or is this a trend?
Well, if you look at the price of gold over the last 6 months, it's pretty much been in a straight downward sloping trajectory. And it's kind of interesting to look at it, especially relative to overall stocks. And there's been a difference, like a performance differential of kind of 20%ish, around 20%. Gold's down, call it 10, 11, 12%, and stocks are up, call it 8% since October. And, you would think, and I guess this is what's interesting, is you would think a lot of the premise behind buying gold has always been, all these currencies are they're going to have to inflate away because they've got so much sovereign debt. And you would think over the past 6 months we would have seen more of that, right? I mean, the U.S. continues to run deficits, Europe continues to run deficits, we keep having bailout after bailout, and yet that hasn't necessarily played out in the gold market. And I don't know whether the gold market just got overheated. And gold is tough, and we've talked about this before, because there's no way to intrinsically value gold, right? I mean,
Sure.
It's only what somebody's willing to pay for you. It's not like a company that you can say they're going to earn X billions of dollars, and therefore I'm willing to pay $50 for a share of their, my cut of earnings. And so we have seen, and it's really been longer than just 6 months. 6 months been a bad performance period. But gold, hasn't done that well really over the last 12 to 18 months, and especially relative to stocks.
Now, you mentioned stocks, and we noticed here we're getting more and more details of this Cyprian haircut that they're going to. Everybody gets hit for 40% of the monies they deposited in banks because that's fair, I guess. Yet the stock market seems to go along like it didn't even notice. What do you glean from that?
Well, I think what I take away from that is the fact that Cyprus is a $20 billion economy, and it really is just a minuscule part of the overall global economy. And so, I think that people are definitely not happy with the precedent, and it clearly sets up a lot of potential problems down the road in Italy and Spain and Greece and Portugal. But I think for right now they're going, okay, this deal's done. A lot of people in Cyprus, and actually I don't know if you talked about this, but there's been more and more reporting over the last couple of days that these Cyprus banks that have branches in England and even in Russia, all of those branches were open and customers were able to access their money. And so most people now think any foreigners who had money there moved it before, over the course of last week. So the people that are going to get hit are pretty much just going to be the Cyprus locals. So it's sad to see it happen in Cyprus. But realistically, it doesn't. Just doesn't impact the global economy that much.
Well, it seems just like the behavior pattern would give investors a pause, but it doesn't seem to, because we chug along on Wall Street. So what's doing well right now? I mean, what sectors were up? I guess everybody must have been if it was that good of a day.
Yeah, I mean, essentially everybody was up today. The broadly defined conglomerate sector was actually down slightly, but we have just seen broad strength across a lot of different sectors, and the Dow again hit an all-time high today. The S&P 500 is just within a couple points of an all-time high, but it's really been broad-based. I mean, today specifically, some of these non-cyclical companies and energy companies and healthcare companies did very well. But again, it's been across the board strength in the equity markets. And what's interesting, going back to Cyprus, is that as people become less interested in holding their money at banks. Banks don't pay anything, and maybe there's a little bit of fear. Bonds don't pay anything, but stocks still pay dividends. And a lot of this, what we've seen in funds going into the equity market, has been coming out of cash. It's not necessarily people selling bonds and buying stocks. It's just cash from the sideline moving into the equity markets. And this Cyprus thing could end up speeding that up a little bit.
Well, but does it hurt the bond market, since really that's what really hurt the Cyprian banks, was that they were invested in one government who was invested in another government, and they all start daisy-chaining over?
Yeah, the bond market has continued to do very well. And in fact, treasuries have rallied again the last few days, and corporate bonds remain, very, yields remain very low. And so we haven't necessarily seen people pulling out of the bond market. Now, the countries, specifically the sovereign debt of certain countries that people have been nervous about for several years, I mean, yields remain high on those. But I don't think Cyprus specifically has caused people pause to say, "Wow, we got to get out of the bond market."
Well, Mark, I appreciate it. What are you putting people in? Any changes on that right now? Pretty much everything doing well, or is there one place over another that when people come to you at Red Wave Investments, are you saying this is a winner for growth into your retirement?
Well, I think it's kind of monitoring the entire portfolio, and we've talked about healthcare, and healthcare has been a favorite sector of mine for the past many months, and it continues to be. And I kind of work with each client individually to come up with a program that fits kind of their needs, their objectives, and in companies that I think are attractive at the time.
Well, I appreciate your time, Mark, M-A-R-C, at redwaveinvestments.com, and redwaveinvestments.com. Follow along at home, and you've got to get those 401ks together, because who knows what we'll have. We've got to count on ourselves at some point. Thanks so much.
No problem.